Hello traders, this is Orlando for Snipe the Trade, and today we're going to go through our buy position on the US dollar Japanese yen. Now, the rationale behind this trade is that the Fed, or the Federal Reserve in the United States, hiked the interest rate or the overnight interest rate to 0.75 base points from zero point 0.5 base points. This means that the Fed is looking at an improved American economy and no longer feels the need to have a policy of interest rates around zero. Now, what we had here is we had a pending buy order just above this range right before the announcement. Okay. Now, remember that we didn't know that the Fed was in fact going to hike the interest rate, but the market was pricing for a hike. So what we did is that we put a pending order, and when the news hit the wires, there was a huge buy pressure and a huge buy volume on the US dollar. And we chose the US dollar Japanese yen as our vehicle to buy dollars because it presented the best risk to reward scenario and the best setup. When we got filled right here, what we did is that we waited for the buying pressure to continue, and we closed, I think, 3/4 of our position around these candles. Now, what I'm going to do, I'm going to grab that trade. You can see that we closed 1.5 lots on the US dollar Japanese yen right here. And I'm going to drag and drop it to the chart. Now, I'm going to zoom in so you can see what we did here. What we did is that we waited for this 4-hour candle to close, and then we waited for the APAC or the Asian session to open, and we were monitoring this trade very closely. And when we saw that buyers came in on the Asian session, we decided to hold on to the trade a little bit, and right here we closed it for a around a 210 pip win, a 211 pip win in just 8 hours. And we decided to move our stops to lock in an extra 135 pips on the rest of our position. And right now you can see that we are finding some selling pressure around this level, and this is a very important level. What I'm going to do, I'm going to zoom out and I'm going to go to the daily chart, and I'm going to show you how important this level is. So I'm going to zoom out again, and as you can see, if we go back in price action, we have a very strong area of resistance right here. But if we go even back in price action, you can see that there is in fact a huge base here, a huge area of support. You can see that when we dropped here, even though price came all the way to these levels, buyers came in and pushed price up once, twice, 3 and 4 times before actually breaking down to the lows below 100. And right now we are testing these levels. And I'm going to go back to the 4-hour chart and zoom in on the chart. Let me go back to the current price action. And what we are doing here, we are waiting for a true reaction to these levels. We can see that we had 1 and 2 very bearish candles, but these can also be long positions from the news event closing on, or closing their long positions, which means that we are going to find selling pressure or bearish pressure when these long positions close at these levels. And we decided to put or to trail our stops to these levels because we wanted to give our trade a little bit of space to continue if in fact breaks with the 118.86-87 level and 119 and above, of course. But after these two very bearish candles, it was hard for us to hold on to the trade. Now, if we hadn't closed our trade right here, or one or two-thirds of our position right here, we would have in fact closed our entire position at when these two candles appeared. But because we decided to close it here and trail our stops, we can in fact withstand corrections of around 130 pips, which is the ADR, or the average daily range on the US dollar Japanese yen. Our final targets should be around this peak right here, which was also the high of this range, and a level of resistance that was tested as support once we broke to the upside, and then tested as resistance once we broke to the downside. So in fact, we are waiting for a move to the upside of around another 290 pips on the rest of our positions. But if we look and if we see strong bearish reaction to the 118.86 level, we are going to let price stop us out for an extra 135 pips.